the United States has all of the gold that we've claimed to have since the last audit in the 1950s, if we in fact do have all that gold and you divide it into $35 trillion of debt, if we had to pay our debt off with the supposed gold that we have, and I highly doubt we have all that, but assuming we do, the number would have to be over $125,000 an ounce. Mm-hmm. Now, as far as a trade currency, I'd have to see exactly what the global trade is minus the West, but it wouldn't be completely minus the West, because if the West is trading with BRICS nations, then one would think that the Western nations would have to have these units in order to settle the trade. So they're going to have to go out, dump dollars, dump euros, dump yen, dump British pounds to create the capital to purchase these units. And of course, that's basically a bid directly underneath gold, because, probably the easiest way to purchase a unit would be with gold itself. Mm-hmm. I mean, how are you going to do it with 50, the other 60%, if it's going to be 50 different currencies? There's no way. That'd be like trying to herd cats. So you just go directly to the source, you buy gold, and basically what you've done is you've bought yourself, representative units, if you will.
Let's go back to what you said about silver. You were talking about the overhead resistance. Many people in these communities are talking about that $50 mark from the last all-time high. You're suggesting the overhead resistance is much lower than that, that perhaps maybe the weak hands have already been washed out here, given the time span between that last high. Explain that to the audience members. What do you mean by that?
Well, the last high was 50. And in between that move, I think we ran from $15 or $17 up to $50 in about a 6-month period of time in late 2010, first half of 2011. And, there was choppiness. It would, and I don't even know if these numbers are real or not. I'd have to actually look at a chart. But, we ran up to 20, 25, pulled back a little bit, ran up to 30, 35, pulled back a little bit, chopped at 40, and then we spiked up to 50. So on the way up, there were resistance levels. Mm-hmm. And on the way down, we bounced off of 44, we bounced off of 40, bounced off of 32 and 30, crashed through 30. Normally, those would be points to look at for support and resistance, but that's 11, 12 years ago, 13 years ago. So those are long gone, long forgotten. And I mean, the sellers at whatever level or the buyers at whatever level, they're all gone. So those are meaningless. Right. They're meaningless numbers. So, I mean, in reality, there's nothing to stop silver from going, we break through 32.50. There's nothing to stop it from going immediately to $50. Do I think it's going to happen, immediately? No, I think in a more normal market frame, it probably should take, 3 months, 6 months, and that would be a rip snorting bull market. But at some point in time, we're going to have a failure to deliver. We're going to have a massive short covering squeeze. And it very well could turn out that it works out like a light switch, where $50 is meaningless and it blows right through $50 like it wasn't even there.
Goes to no offer.
Right. It goes. Well, my partner Jim Sinclair used to talk about the scenario where you could see gold $50,000 bid and COMEX contracts for gold $10 offered and no bids. And the reasoning behind that is his question was, what is the value of a contract that cannot perform? Mm-hmm. And a failure to delivery is not performance. Right. So basically, you could have the contracts go to zero, and you could have gold basically unobtainable.
Mm-hmm. JC, now would be the time to show that chart I just sent you and to help really underscore what Billy was just saying. If you look at that chart, that's one of the slides from a presentation I'm giving this week. The red line represents the big 4 banks on COMEX that are short. The green line represents the top big 8 bullion banks. If you notice that there are 8 banks right now short, the largest concentrated short position on any commodity ever traded in the history of the COMEX market in silver. Now, why the hell would that happen? Of course, followed number 2, platinum, gold, palladium. So, you know, the 4 precious metals that are monetary metals as much as anything are being suppressed by 8 banks to a degree that the COMEX market has never, ever, ever seen. And when you talk about the CFTC is supposed to protect against collusion, against price fixing, well, they're really doing a shitty job, because this is exactly what they're supposed to protect against. Silver is a small market. It is minuscule, the size of most of these other markets. And look at the concentrated short position of 4 and 8 big banks that are holding the price down. And what beats them at this game are countries like India, who are standing for delivery and took almost 700 million ounces from the West in the last 2.5 years. And then they just, because they have this deal with United Arab Emirates where they don't have to pay duties. Last year in 2023, they did $2.2 million worth of silver imports from January to April. United Arab Emirates, India did from them. And now, over the same time frame this year, 1.44 billion worth of silver imported, a 654-fold increase. They're buying silver wherever they can. And they're using the suppression of these idiots right here, these 8 banks who are holding the price down, to reposition. And that is how they win. No one ever stood for delivery. It is how you win, because all of this selling right there, you're talking way, way more silver that is in contract form than they have the ability to deliver if called to the carpet. And this is how it all ends poorly. And when you see that chart, it should really explain a lot of things.
Bill, you're an authorized broker for Miles Franklin. What are you hearing right now in the last couple of weeks talking to clients? Are we seeing market jitters right now? I know a couple of years ago we had a big panic to own moment. You guys' phones were off the hook. It kind of died down with the premiums the last couple of months. But just now in the last couple of weeks, as we're seeing this huge turnaround here happening on the geopolitical front, what are you hearing? What are people telling you?
Yeah, up until a couple weeks ago, I think, yes, it had slowed down somewhat. We're getting, and Andy can confirm this or deny it, but I think what we're seeing are less orders, but bigger orders. The phones aren't ringing as much. I'm not getting as many emails. And I do think that North America as a whole, the demand is down, and that's the reason that you're seeing premiums back to where they were before COVID and basically normalized. And I do want to mention that chart that Andy had sent you and put up. You'll notice that the top 4 most heavily shorted are gold, silver, platinum, palladium. Platinum and palladium, not really precious metals, not really money. They're more industrial. Silver's a hybrid; it's industrial and money, and gold is money. The comment I want to make is, you have to ask yourself why. Why is it that the metals themselves are more heavily shorted than anything else? And I think it's a very simple answer, and it's something we've talked about for years and years, is that the reason gold, and I'm using gold and only gold right now, the reason gold has been suppressed for all these years, I mean, literally, go back to the 1960s, the London gold pool. There's been a concerted effort by Western governments to suppress the price of gold. And the simple reason is gold is the anti-dollar. Gold is the #1 direct competitor to the dollar. I mean, if we were talking right now and gold was $24,000 an ounce instead of $2,400 an ounce, that would be indicative of a collapse in confidence. So what they've done is they've tried to prop the dollar up by knocking the crap out of gold, whenever they get a chance with paper, so that they can point at the price of gold and see, gold bad, dollar good. Now, why is silver more heavily suppressed than gold? and Andy touched on it, because it's such a minuscule market. I mean, total global production, even at today's prices, only amounts to about $20 billion a year. And I mean, you got individuals now that could drop $20 billion out of their pocket and not miss it. So it's an absolute minuscule market. But if you saw silver run to 50 bucks, 75 bucks, 100 bucks, 200, 300, 500, if you saw silver blowing out to the upside, that's going to drag gold along. That's going to light a fire under gold and thus destroy confidence in fiat currency. So the reason silver is the biggest redheaded stepchild in the history of financial markets is because it is the fuse to light gold on fire, and gold is kryptonite to Western fiat currencies.
How about gold? Also, people are asking when they get into this, what's their split? Did they buy 50-50 gold and silver? Did they go heavier on silver to capture this wave? What would you suggest to the audience members? I'll start with you, Andy, as you're on the screen, and then we'll ask.
Well, I mean, gold's the only tier 1 asset in the world. It's important. Silver is the value of a generation. And if you play the silver to gold ratio, which I think is highly probable that we see it revise, you know, I mean, it's coming out of the ground at 7 to 1 or less, and it's priced at 80 to 1. It's the trade of a generation. From a pure standpoint of potential and undervaluation, it's silver. And I would not ignore silver in terms of the way the central banks are accumulating it. But I will tell you that in the end, I think a lot of your assets we would prefer to convert silver to gold when that ratio corrects, because it is the only other tier 1 asset. And let's be honest, you know, Bill could put $1 million worth of gold in his backpack and get on his horse and go for a ride. $1 million worth of silver, the horse would be pulling a trailer that would weigh 1,500, 2,000 pounds. So, you know, this is the main problem, logistics. But silver for value, in the end, I have a hard time believing that gold would not be the place to have the majority of your assets, but not yet. Silver provides probably the most undervalued or best trade, silver to gold, of my career for sure.
Okay, very good. And how about yourself, Bill?
I'll put some numbers on it. My recommendation now for the last probably 3 years, 4 years has been, if you're going to do a mix between gold and silver, you should be at least 70% silver. And the idea being, when all is said and done, you're going to want to be at least 70% gold. The ratio's at 80 right now. If that ratio comes down to 40, that means that silver outperformed gold 2 to 1. So if you bought all silver, ignoring taxes, if you bought all silver and you swapped out at 40 to 1 from where we are at 80 to 1, you would be able to buy 2 gold ounces for every 1 gold ounce that you could buy today. So you want to be heavier in silver. And if you want to be 100% in silver, or, you know, 95% in silver, I don't have a problem with that. But don't, on the way out, don't get cute. If we see, say, 50, 55 to 1, you swap out to whatever you want to ultimately get to. Swap out a quarter tranche. And then at 40 to 1, swap out another quarter tranche. And if we get down to 25, 30 to 1, swap the rest of it out. And now you're at 70-30 gold or 80-20 gold, whatever. But yes, you want to be, when all is said and done, you want to be heavier in gold than silver, because gold is, the only thing gold is money. And silver obviously is money. It's industrial, medicinal, solar, et cetera, et cetera. So I think trading the ratio just makes all the sense in the world, because the ratio was created by what we were talking about before. It was created by the fact that they're suppressing silver as hard as they are. They've suppressed it harder than gold because they can't let it go higher without gold taking notice and then lighting up the whole system. So take advantage of their suppression to get to an 80 to 1 ratio and write it down to 40 or 50 and end up with more gold ounces than if you just bought it outright today.
And 40 to 1 is roughly the 200-year average price-wise, as Bill calls it, man's ratio. God's ratio, as he calls it right now, and appropriate to call it that, is about 7 to 1. That's what it's coming out of the ground at. So at 40 to 1, which would be an average of two centuries roughly, you're still 6 times above what it's coming out of the ground with. So he's saying pigs get fed, hogs get slaughtered. When you get anywhere near that point, trade some of it. And I think it is the best, especially if you're in an IRA, because now you have no storage issues for the silver and the ability to, no tax issues when you make the trade. So,
Right.
But yeah, I consider it to be the trade of my career too. Australian silver is just fine. And I don't understand. You've asked this every time. Why don't you get an answer? I'm not quite sure what you're talking about. I've never seen an email about it, but Australian silver is just fine. And there was a good portion of 2020 and 2021 when Snafu Radio, Scott, which is a good dude, and I like him, started working for me. That was the only 1 ounce silver coins you could find in the United States, as everything else was gone. And the Australian mint is one of the best in the world. So you can return Australian silver. I like Australian silver. I own Australian silver. Maybe, Bill, you can explain to the listeners why you believe American coins, and to a degree, I understand it. I was at the dinner table with you with Jim Sinclair. Maybe you can explain why you think American coins are preferable to everything else.
You mean to avoid confiscation?
Yes.
Go ahead, Bill.
Right. Jim and I believed, and I still believe, that if you're an American, you want U.S. mint lineage coin. You don't want generic rounds or bars. I mean, especially in a system breakdown, how are you going to test those out in the public? How are you going to get somebody to accept a bar that may be 100% titanium inside? Mm-hmm. You don't want foreign sovereign coin. The reason being, if there is a confiscation, and I don't think there will be a confiscation in silver, I think it would be almost impossible because there's so many different uses for it. I don't see that happening. But if they were to confiscate gold or make gold illegal, I think it would be very, very difficult, because today is different than it was back in 1933, 1934. Back then, gold and silver were trading as currency. They were the currency of the realm. So basically, the Treasury called the money back in. It's no different than changing over a currency, calling the old currency in, and issuing a new currency. In today's world, if you own a gold eagle or you own a silver eagle, you basically bought those directly from the vault, whether the dealer bought them from the vault or whatever, or from the mint. They originally came from the mint. The mint was paid for those coins, and part of that payment was profit to the mint. So how could the mint sell you eagles today, pocket that profit, and then next week demand, oh, by the way, you have to sell those back? There'd be lawsuits for the next 20 years over that. Right. And then going one step further with gold, the ultimate as far as safety from confiscation would be pre-1933 gold, the Liberties and St. Gaudens, because those, as it stands right now, are considered collectibles. They're not considered bullion.
Yeah, and just one last thing, for 2020, 21, 22, I'm one of only 27 U.S. Mint authorized resellers, not a primary distributor, but one notch below. And I'm high up on the food chain, and there wasn't an ability through every major distributor or the mint in America for most of that period of time to get Silver Eagles under $12 to $15 an ounce and over spot. And that's why I did not recommend them, because, Bill knows. I mean, he's had some big clients who didn't care, and they paid massive premiums along the way. And if you do it knowing that you're going to pay huge premiums, fine. But if I'm recommending to the public, look, you want to get as much silver as you can either pay $15 an ounce over spot to get a gold eagle or a silver eagle, or $4 or $5 over spot to get a kangaroo, which for my whole career were 50 cents spread apart, not $9 or $10. Well, that's the rationale behind it. If someone really wanted to trade their other sovereign coins into eagles, it probably isn't the smartest idea, but we can help them do it. And in the end, it's about number of ounces that matter. But yeah, I put a lot of credibility in what Bill is saying. You could right now trade your kangaroos in for junk silver, get more silver, and end up having American-made lineage coins. So just something to think about.
Okay, very good. I appreciate that. Go ahead, Bill.
Yeah, just to be clear, anything outside of an IRA, I've never been big on recommending eagles. Basically, my recommendation for silver eagles has been, if you want U.S. Mint lineage in an IRA, that's your only choice. Outside of an IRA, hands down, in the United States, junk silver is the best form to own. It's really not counterfeitable because it's got to be all scratched up because it's circulated. You can look at it on its edge, and there's no copper in it. You could drop it on a table. You can hear the difference. So it's readily identifiable, not counterfeitable, and most importantly, it's the small dimes are the smallest denomination. Basically, $1.38, so call it 14 dimes, is 1 ounce, which gives you in a system breakdown situation, it gives you 14 transactions versus 1, whether it be a bar, a round, a foreign sovereign, or an eagle. It just makes sense. Mm-hmm. If you're using a 1 ounce coin and silver does revalue much, much higher, how are you going to use that for barter and get change back? You won't get change back. You'll get credit back from whoever you're trading with. And, credit is good until it's not good.
Right. And we're almost at that moment now, apparently. Last words of advice here. It appears that everything is vectoring on this big crescendo, whether you're looking at the political stuff or the financial stuff. A lot of there's a lot of change happening at the same time, and the rate of change is also accelerating. And some people are a little bit nervous and antsy about that. What would be your advice here on how to traverse these times? Let's start with you, Andy.
Tread carefully. Pay yourself first, as I've always been saying. And I think it's never been more important to own gold and silver. They are not an investment. They are wealth. And if you are not a contrarian right now, you're damn well bound to be a victim when this thing breaks. So I tell people to buy gold and silver, not to get wealthy, but because it is wealth. And that would be my advice right now. I just think that if you're all in dollars when this thing goes nuts, especially when you have a common settlement currency that is gaining momentum, it starts out slowly and moves quickly. I don't know, man. I think as the Chinese curse says, may you live in interesting times. These are the most interesting of our lives. I have an uneasy feeling about what's in store for us one way or the other. So tread lightly, I guess.
My advice, it is what it's been. Just do the best you can to prepare and do it as quickly as possible because time is running out. Bottom line is, I can pretty much say this is no longer my opinion. It's pure math. The whole shithouse is going to come down. And the only problem is society today is not the polite society it was back during the Great Depression. Back then you had neighbors helping neighbors. And today you're going to have neighbors picking at fallen neighbors like vultures. That's just a function of society. So protect yourself because no one else is going to do it for you.